Hey, what's up, everybody? Sam Parker, owner of My Credit Guy Credit Restoration. Make sure that you go to www.mycreditguy.com for more helpful videos and tips. Today, we are going to talk about foreclosures, deed in lieu of foreclosures, and short sales. There's a lot of confusion out there with which is which and how it differently affects your credit and your ability to qualify for a home loan. So let's just start with a general scenario, okay? So client is getting behind on their home loan. They're 30, 60, 90, 120 days late, okay? So 4 months past due typically. The creditor, the mortgage company, is going to do what is called foreclosure proceedings started, which is just what it sounds like. That's what it's going to say on your credit report, is that they're initiating that foreclosure process, okay? Now, at that point, you have several different options, okay? You can just continue not making your payment. That's going to result in a foreclosure. And a foreclosure is the bank taking back the property, taking back the house, and basically kicking you out. Okay. Now, what will happen after that is that that property will typically be sold at a what I refer to as a sheriff's sale, and they're going to sell the property for what they can. Now, the problem that you're going to have is that sometimes they can't sell it for as much as you owed on it. So you're going to have what's called a deficiency balance that in most states you will be responsible for, and you're going to have to pay it back. Okay, so that's foreclosure. You could also catch the payments up. So then it's going to say foreclosure proceedings started, foreclosure redeemed. Okay, but you're going to have some late pays on that credit report, and there's not much that can be done about it. The other thing that you could do is a deed in lieu of foreclosure, and that is usually only going to work if you have significant equity in the house, where you can go back to the bank and say, look, this house is worth $180,000 in my opinion. We only owe $120 on it, but we can't get it sold. Will you take the whole thing back, including the equity that we have built into it, but then we get to walk away from it? And if the bank agrees, then that's called a deed in lieu of foreclosure. Your other option is what's called a short sale, and that is going to the bank and getting them to agree that you can sell your house for less than you owe on it. So let's say that in your neighborhood, when you bought a house, it was worth $200,000, okay, and you've paid that down to $170, but now the market around you maybe has decreased or gotten worse, and now your house is only worth $150. So there's a $20,000 difference there. So you can go to the bank in some cases and say, hey, if I have a buyer at $150, would you agree to that? And then you can sell it to a third party for less than what you owed on it. So those are really your options. In terms of how it affects your credit, well, really what you're looking at is the late pays that you acquired during that process. So whether it ends up being a foreclosure or a short sale, what really affects you is not the verbiage of foreclosure or short sale, it's how many late pays you got on the way to getting that. So conceivably, you could do a short sale, get the bank to agree to it, and get a buyer, and if the bank would somehow agree to let you do that before any late pays were accrued, then you could get out of that, really not hurting your credit at all. So really what you need to pay attention to is how many late pays were acquired. And no, I am not, I'm a credit repair guy, I'm not whiteout. So if it's a recent valid late pay or a valid late pay at all, there's not going to be much point in going after it. It's not really going to do any good, and it's probably not going to get deleted. And just so you know, after 2 years, a late pay has little, if any, effect on your credit anymore anyway. So there you go. If you have any more questions, get in touch with us. Feel free to comment below. Loan officers, if I said anything wrong, you make sure to correct me, guys. And just so you know, in most cases, after a foreclosure or a foreclosure-like event like that, most banks are going to need 3 years before they can finance you. And you still have to have your credit in order at that 3-year mark. So give us a shout. See you later.